First, though, let's talk money matters with financial expert Terry Savage. The stock market is up just a little bit right now, but yesterday stocks tanked to finish their worst month since 2022. Fears of inflation drove that sell-off, and Terry's going to weigh in on with her perspective. Hey, Terry.
Hey, Terry.
And, you know, I was just watching that China cabinet going down the street, tilting each way, and it reminded me of the Fed chairman. That's the weight he has on his shoulders, really. We had some weak news about the economy. Everybody from McDonald's and Starbucks are saying, yeah, consumers aren't spending as much. But we also yesterday had some news about wage growth, which you think would be great news. It's stronger, especially at the lower end of the economy. But wages are part of the cost of doing things, and the Fed is scared about inflation. It's not coming down anymore. It's not going up, but it hasn't come down as much as the Fed wants. And so everybody's holding their breath today. Now, they're not going to raise rates today, but they might just say, well, maybe we might be forced to hike, and that's what the market is scared of. Remember, in January, everybody said, oh, they'll cut 4 times, 5 times, 6 times. Now it's about 50-50. Will they cut it all this year? So that's what's got the market moving. I want to add one quick note. I never talk about individual stocks, but this relates to all of you out there who made that decision to take or not take Medicare Advantage. I warned against that, and just a few minutes ago, CVS, yes, they're the drugstore, but they also own Aetna, which is a big provider of Advantage plans. Their stock tanked almost 20% this morning. Why? Because they're spending so much more than they expected on costs for the Medicare Advantage plans. They're spending over 90% of every premium dollar. So the stock market didn't like that. And what that means is they're going to get tighter, these Advantage plans, all of them, on authorizing costs. And that's why you wanted to stick with traditional Medicare. And this is going to be an interesting way this plays out for all of you on Advantage going forward.
All right, let's get to viewer questions. I see that I bond rates have dropped again. Should I keep the bond I bought last year?
Okay, this is very interesting. Every May and November, so just yesterday, the Treasury announced the new I bond rate overall is 4.38%. That's not too bad. And these new I bonds that you buy now have a fixed floor rate of 1.3% that will stick with the bond forever. But all of you who jumped in and remember it well when I bond rates were well over 9%, those I bonds, which you purchased 2 years ago, had no fixed floor rate. So they only get the 6-month inflation adjustment, which, let me check, is 2.98%. So you're only getting 2.98%. I've just updated at terrysavage.com my story on how to buy I bonds and everything you must know. And I think this might be the point where you want to take the 3-month interest penalty on those older bonds that have no floor and maybe switch into newer I bonds or to Treasury bills.
All right, the next person says, are Treasury bills still a good buy, or should I look for CDs?
You know, and with Treasury bills right now, the 6-month T-bill is paying about 5.4%. If you can find a bank CD, that's fine. But remember, there's no state income tax on Treasury bill interest. So that might tilt you to buying T-bills, and you do those at treasurydirect.gov.
All right, this next person says, I still haven't received my tax refund from last year. What should I do?
Okay, I've been getting a lot of posts on my Ask Terry blog about refunds. Now, we're not talking about you haven't gotten it yet and you filed 6 weeks ago. Those should be coming through now. But if you're a year behind, you want to go to irs.gov/refunds. That will lead you to a page that says, where's my refund? And you can trace it. Now, if they say it was paid and you haven't received it, you really need to contact the Office of the Taxpayer Advocate. You need to file this is a great form 911 for help with your refund. And I recently wrote a column called Where's My Refund? It's up at terrysavage.com. Read that column. It'll give you direct links on what to do if you're still waiting for your refund from a year ago.
All right, now another question. My daughter entered into a negotiated credit card payment arrangement with the company. I have enough funds to pay it off, but she tells me she can't. Is it possible to cancel the agreement or pay off early?
Okay, look, I have recently written several columns of warning about these kinds of credit card deals where you pay them some money every month, you stop paying your credit card, and then they say they'll negotiate. Those are like the Roach Motel of finance. You can get in, but you cannot get out of those deals, and they ruin your credit. If the credit card issuer has already written off the debt, and now you're being approached by someone who says, I'll make a deal for you, don't fall for that. Your credit report is already impacted. Paying off the debt at that point won't help. The only way to get trusted and helpful advice is to go to nfcc.org, the National Foundation for Credit Counseling. They are not a ripoff, or call 1-800-388-2227. They will give you advice on how to deal with overwhelming credit card debt. Maybe it's bankruptcy, that's a long shot. Maybe it's working through them and they'll report it, but they don't ruin your credit by telling you don't pay your bills. They'll negotiate with your creditors.
All right, Terry, thanks so much. Her book is called Social Security Horror Stories, available now. You can ask her a question at terrysavage.com. Thanks, Terry.
Thank you. Time now for Around Town.
Hey, Anna.